All right, ladies and gentlemen, I'm going to spend about 30 minutes looking at the markets. Now, for the sake of brand new people, I know we've got somebody brand new on the call today. I'm going to just kind of explain what is going on with the chart right now before we get into it. Right. Let me just hide that. So, what we do with this software, the trading software, we have a 4 hour chart displayed in the top right hand corner. So that shows the direction of the trade we're going to take. So this is red, showing that we're looking for sells on a 4 hour time frame. And this was the market as it stood on Friday. Now the market's closed for the Forex market. Different markets, they're open, like crypto market, which is 24/7. But for the Forex market, futures market, the market's going to open in about an hour or so time. All right. So the way this works, in fact, let me just get rid of one more thing. I'll hide that. So the way this thing works, the software, this is called AIO software. You have a background there, which is showing you a 4 hour candle, shows you the silhouette. And then inside of that is another silhouette, which is an hour. And then inside of that, you've got your candlesticks. And each one of these candles, I've got on a 5 minute chart, represents 5 minutes. Okay. Green ones are when we look at to buy the markets. And if we have any red ones, is when we're looking to sell the market. So let me just go back. Well, when we come across it, we'll talk about it, because at the moment, the bias has been very, what we call bullish, the market going long. So that's the premise of what we're going to look at. Now, this is a euro dollar chart. I don't typically trade euro dollar, but I have been looking at it, the euro, more of late because of my interest in the dollar. I normally trade the Nasdaq, which is made up of a whole bunch of different different companies, tech companies, and so that moves very well, just like gold and different currency pairs like pound pairs. They move a lot in a given day, depending on what's happening. So as you can see here, if we're going short, which we're still in the market, these candles should be red. In conjunction with our 4 hour time frame. So the hour, the 4 and the 5 minute are all speaking the same language. That's when you're trading with the trend as opposed to trading against the trend. So again, as it stood on Friday, market was just not doing a great deal. I was looking to take a trade on Friday afternoon, but nothing much happened. So let me just tell you what I'm really focusing on right now. But before I even take a trade these days, I look at what we call the DXY, which is the dollar index. It's getting noisy now. So I look at the DXY. So I'm going to bring that on my chart. Okay, so the DXY, for you guys who are not familiar, is called the dollar index. This is a really powerful barometer as to what the market is going to do, especially if you're trading the Nasdaq, you're trading gold, you're trading any dollar pair, primarily euro dollar and some of the other ones to boot. Now, the reason for that is the dollar index is made up of 57.6%, to be precise, of the euro. So even though it's a dollar index, the dollar index is made up of a basket of 6 currencies, with the with the euro being the most heavily weighted. Okay, and so if you're going to get a buy signal on the dollar or a sell signal on the dollar, you're going to look to do the reverse on Nasdaq, look to do the reverse on gold, look to do the reverse on the euro, so forth and so forth. Okay, so just to show you the power of this, and why for me now I don't take any trade without first consulting the dollar index, because it's like, why would I? Now that I know what I know, it's one of the best indicators you can have on your chart. So this is what happened Thursday afternoon. I was out, I didn't take this trade, but I'm going to show you exactly what happens when the dollar moves and why everything else moves after. Okay, so it's almost giving you an indication as to, dude, if it doesn't happen at the same time, it's going to happen 5 minutes before the currency you're trading on is going to move. On a 3 minute, even maybe more so. Let me just go to the 3 minute. I have been recently looking at the 3 minute, because the move on a 5 minute is awesome, but if you can catch some of that on a 3 minute before, you know, you're going to get part of that move. So let's just go. I'm just going to work on a 3 minute time frame. So each candle is 3 minutes. Now this is pretty drastic. We know right now we're in the middle of wars, rumors of wars, ceasefires, whatever. Okay, so those are the times people make a fortune. So we're living in probably the best time right now to make a fortune of these moves. Now let me see. I'm going to show you at 1:27, which is my time's Eastern. I'm on the Eastern time zone. So 1:27, you can add 5 hours to it, and that's the time in the UK. So 6:27 in the UK, this move happened. There was no news announcement. This just happened. There's probably a tweet. There's somebody a message somewhere. If you go to a website like Forex Factory and stuff like that, investing.com, it'll just keep up to date with what's going on with the news. If you're looking to place a trade, because something could happen and will take you out, right? So I'm not going to go to the website right now. Forexfactory.com is a website you can check. So let's have a look at this. I'm going to load up. There's two ways of doing the dollar index. If you've only got one, if you've got a free version of TradingView, which is the software I'm putting this chart on, you can only trade on one chart. If you've got the paid version, you can have two charts at the same time. They're going to show you both versions. Now, if you're trading with the free version, you can add or compare, let's say gold. If you're a gold trader, you can add gold to your chart, right? So, and what it will do, it will show you. Now, the only problem with adding gold and stuff, you can't drag the chart in the same way. So it's difficult for me to bring up the chart, but I just want to show you for numbers sake. You can see this is gold in blue going that way. So we're going long on gold and we're shorting the dollar. Okay, don't forget the gold is paired with the US dollar. So if the dollar is dropping that way, this is clear indication that we're going long on gold. If I do compare again, I'm going to take that one off because otherwise it will look a bit messy on my screen. I'm going to put NAS. So again, NAS 100, US Tech. If you're trading futures, you know what the symbol. But I'm just going to do this one. I'm going to put the same scale rather than a new pane. So again, I'm going to put that in there. And it's exactly the same move, guys. Yeah, with NASDAQ, we've gone long, we've gone crazy long. And gold, not gold, the dollar index, we're shorted. And then, you know, let's show you one more thing. You could, if you wanted to have multiple, if you trade more than one currency pair, you could add more to the pairs. So you got gold, you got NAS, and let's just for kicks, I'm going to add the euro dollar if you trade Forex. So all of those should be in the same direction. So the euro was in an up direction. These ones really scaled, but again, the euro's going that way, the dollar's going that way. We know we're making good money on any one of those, whether you trade indexes, you trade commodities, or you trade Forex pairs. So I gave you a scenario on all three. And obviously, if you're new to trading, you would only focus on one currency pair, master that, nail it, know its movements, know it, you know, intimately before you start adding more, because then you just only confuse yourself. So adding one to my chart, which was the euro dollar, it's a bit easy on the eye. So again, dollars dropping that way, the euros going that way, easy money. okay, to make from this trade. Now I'm going to remove it. I'm going to keep the dollar on its own. Now, if you've got a paid version, you're going to want to do this. Now, I was having them side by side. Funny enough, when I was in church just now, I was like, you know what? I'm going to have them not side by side. I'm going to hide some of this stuff. I'm doing some testing on some legacy crossover, and they're actually pretty good. Let's keep it basic. Basic is good. Let me minimize that. So I'm going to do it the other way. Yeah, as I was in church, I was like, wouldn't it be better having them, rather than side by side, having them literally in the same way I just showed you, depending on your screen size, you know, if you're doing this on a laptop, which I recommend, if you're doing it on phone, obviously it may look different, but the most important thing, regardless of the asset you're on, if you're on a phone, you might want them side by side, vertical instead of horizontal. But the most important thing, guys, you want to be in alignment with the pair that you're trading. So that brought up the S&P. I don't want S&P. I want NASDAQ. So S&P does move in a similar vein, but I'm only interested in NASDAQ. Now, this is what makes it even more like easy, like on the eye. Like just so easy for you to see why you want to put the dollar index on your chart. Now, if I look at the time, let me just line these up so they're perfectly in alignment with each other. If these fire off at the same time, guys, this is especially for those of you with the trading software, you don't necessarily have to wait for the candle to close. All right. When they move, they're going to move at the same time. And in my testing, it's worth just getting in. If you're at your screen at the time, you may not be at the screen at the time. You may not see these alerts. Now, these alerts, I think I've got mine set to before the candle closes, I'll be alerted. I don't know if it's a setting I had to change or anything, but that's what I have. But even if you didn't, you're still going long, right? It's easy for you to take this trade. So let me just walk you through this. I'm going to remove some of the stuff on here, just so that the chart's a bit cleaner. The AI, I'll show, especially Maria, I'll show you the AI in a minute. But I'm going to take that off the chart, so the chart's cleaner. So this crazy move happened on the dollar index at 127. We get the same move. Can I just line it up? Yeah, 127. Oh yeah, this is on a 5 minute. So let me put this on a 3 minute. So I've got the NASDAQ on a 5. I'm going to put it on a 3. So they're exactly the same. Right, let me just drag that back. Let me drag that back. And we'll show you exactly the same trade at the same time. Right, so I've got the dollar index up there. Let me just have them in alignment so they're directly under each other. And we get that move on NASDAQ, right? So I'm going to bring this down, bring this up a bit. Actually, it's difficult to show the move because it's such a big move. But anyway, this candle is just a killer candle. So we get this move. It's interesting enough. Typically, when you get a large move on a single candle like this, price is going to come back and do a retest or grab liquidity because the move happens so quick. Just to give you an analogy, I like to use analogies. Imagine you had something on the top of your car and you took off and you went 0 to 60 like really quick. Loads of stuff fell off the car. It didn't stay on the car, of course, because the velocity. So it had to come back to pick up. The markets move in the same way. If you get a really strong bullish move or bearish move, look at the size of that candle. It's bigger than all of the preceding candles for that whole range, right? It took out the whole range. Let me see if I go back. This is the start of the New York Open. This one candle took out the high of everything that happened up until that point. Even the 9:30 open for the stock market, which was, if you look at it here, it did nothing. Now, typically at 9:30 on a Thursday, and again, I'm not going to switch to Forex Factory. I don't know what news was happening at 10 o'clock. I don't know what was happening at 8. But typically at 9:30, you'll see some movement. So this shows me that movement is going to happen later on We're just waiting for when that's going to happen. The market's anticipating a big move to happen. Didn't happen at 9:30, so it has to happen a bit later on. Sometimes it happens at 10 or 11, but it didn't happen at 1:27. And I know, and chip in if anybody knows why, but I do know a lot of times around 1 o'clock, 1 p.m., which is 6 p.m., there is a spike that happens around maybe 1:20, 1:30. Keep an eye on it, and you will see exactly what I'm talking about. There's a spike that happens, and it's like, where did that come from? And it happens, especially on gold, when I was looking at gold. But just to show you this move, which is absolutely insane, and this happens throughout. It's not just that move. I can scroll and look at any movement that the dollar. Again, it looks a bit more suppressive here. I'm gonna put them side by side, vertically, so that it's a bit more. You can just understand the velocity of the move was just flipping insane, right? Absolutely insane. It just went, and that just went for the whole day. Went clean move. And we know on the Nasdaq, I can do this on gold. Let me go to gold. I don't trade gold too much, so I'm gonna go on gold futures. If you're trading gold futures, you can put that on there. GC1. Oh, I had it there, gold futures. This is for people trading gold. As we know, gold doesn't need a lot for gold to get excited and move. Well, let's have a look at what gold did. If you think the NAS was good, look what gold did, mate. Flipping egg. Right. Now, same time, yeah, that move on gold, even if you took it late, this one wasn't as bullish as the Nasdaq. Still same move though, right? We get that candle move, and then look, it's gone. Like gold is gone, mate. It's just, you've hit your goal till the market ended. The market closed at this time, so throughout the rest of the day, gold killed it. Now, these just so that you understand what happens with the grey candles. The grey candles are when the market may have exhausted itself a little bit. So you're going to get this retracement, and this typically happens at the start of a brand new hour. So we're starting that at 2 o'clock, which is 7 o'clock in the UK. We get a pullback of that move. Now, we know the move's going long. There's no other indication why we would even think about taking the sell trade here. Nothing tells us. It only tells us to wait until price crosses this line again. This is the top of the previous hour. Price broke it, came back down. So we're waiting for price to reject that level and go again, and it absolutely did that. If you add into your trade, if you take partials, whichever way you trade, or you might have just closed up for the day. The moment you see a grey candle, you'll be like, that's it, I'm done. And fair right, man. That's a huge move. You don't need to be greedy. But if you see this happen again, and you get this set up where you get a grey literally on the line here, this is our line of support. That means price broke this level, it came down, it tested this level again, and it went. And we will look for what we call an engulfing candle, a candle that's bigger than this candle. So we've got a long wick here, but the body engulfs it. You see that? Make it a little bigger. This candle here engulfs, is bigger than this. So we can technically get in on that candle and ride it. This would have been green. It's red at the moment because it's showing you obviously what it's like on Friday night. This is what it would have looked like Thursday at 1:30 for us. Okay? And just to make the point even more, euro dollar. Right? We know the dollar, euro are opposites. So again, just show you if you're trading forex pairs, and you just select your pair that you want to trade. Pound dollar is also a fantastic one. All of them just went nuts because the dollar dropped so much. Dollar pairs all went ballistic on that drop. So again, this is euro dollar. Now, this is interesting. This is on a 3-minute. I noticed on the forex pairs they're slightly behind the timing than you get on. I think it might be my maybe the asset I'm trading on. But anyway, that showed at 128. This showed at 127. All right, but it's the same three. It's within that 3 minute window that showed 25. So this actually gave you a bit of a precursor, just as we were going in, because at 127, the DXY showed a short, and then we went into at 128, we got the buy signal on euro dollar, and it just went. Okay, so again, I could put any pair on here just to not that side, not that side. I always keep the DXY. Sorry, I always keep the DXY showing. What's it doing that for? Oh, come on, Leroy, sort yourself out. Let me keep the DXY on that side. And let me go back to where we were. It was very clear where we were because it was such a humongous move. And I'll just show you here on the pound dollar, just the same bad boy move. All right, so let's just move that. Same bad boy move. You could have put any dollar pair on here, you would have made money. Like, it's not even, you don't need to overthink this when we get a move such as that. So let me just show you that. So again, that's the same time. Now, interesting thing, guys, there was no alert signal on pound dollar, but we already had it on the DXY. So we don't need to have that as a double confirmation. That's confirmation enough. And then if you're trading obviously the same pairs, like dollar Swiss, for example, so dollar Swiss obviously will go in the same direction as the DXY, because the dollar is the first pair, is the base currency in the pair. So the dollar pairs like euro dollar, not euro dollar, dollar Swiss, dollar yen, they will all mimic what the DXY is doing, because that is the dollar pair that we're looking at. So again, that actually gave an alert. So there were so many options to trade this, and again, similar thing, guys. We ran that for the hour. All right, finished trade price. In fact, it kind of retested this level. So again, it came up, retested this level. We get this was kind of more of an engulfing, and then literally it ran for the rest of the day. But if you took that trade, you got in and stayed in, you're good. You wouldn't need to come out and test that. Now I want to show you guys one other thing before I wrap this up on that. Okay, I see a question on here. Oh, welcome. I've got somebody new on the call. I have never traded 3-minute charts, but I have heard from top trade in the past. They use the 3-minute to make. Yeah, interesting, Hitton. Yeah, I was what threw me on Friday. Let me just show you. On Friday, the market opened, New York opened. There was a nice move, and I posted it in the group chat. And so, Maria, if you want to be part of the group chat, let me know. I'll add you to my WhatsApp group. Friday, yeah, this is it. Friday morning, I'm seeing the dollar make this move, right? And I'm like, how comes I'm not getting movement? So we got this move. It was at 751. This is 754. I'm seeing this big old move on the dollar index, and then I looked on this, and I'm like, I was getting grey candles on a 5-minute, but when I put Nasdaq on a 3-minute, it was telling me, dude, go for it. But I was waiting for the candle to go red. As part of the rules, we go from grey to red if we're selling, and we go from what's it called, grey to green if we're buying. So this on the 3-minute, it showed perfectly at 8:03. Beautiful. We would have ridden that down for the whole hour, just as and I'll show you. You can see it on the DXY. Can you see that, guys? Can you see how accurate this thing is? This is what gets me excited. When you look at that big bullish candle at 754 on the dollar index, and you look at the peak of that move on Nasdaq. Okay, so at Nasdaq we had, if we were to draw, and it actually, I've got this indicator that shows the it's actually not showing the thing in there. I've got an indicator that shows go to the settings. There you go. It shows these lines, the daily, the weekly, and the monthly. Okay, Let me show that. So we had, if I was to draw a line up here, and this line here where price never breached up to this level. So I was expecting it price to might have gone up to this high, and it didn't. If I just make this, let me make this, yeah, 10 is fine. So it didn't, but that's the weekly high, guys. So for the week, the NASDAQ never went this high. So I'm not expecting a move to go this way because we've got such a small move left on the NASDAQ. So I'm expecting us to have a drop on the NAS. And I know Sal was talking about that, I think, on the training. But again, so I'm looking at the DXY on Friday, just before the market opens. It's telling me, guys, get ready for a sell on the NASDAQ. They're buying the dollar. The dollar's getting a lot of momentum there. And if I'm a gold trader, which I'm not, but I'm gonna just bring it on here to show you how gold futures could have worked in a similar, maybe in a similar manner. All right. So again, we're here, right? This was 8.0. Yeah, this is 8. So again, gold, we had a peak up here, and we had a drop. Now it didn't turn red until like 8:36 when we got the signal. So it wasn't as good as the trade on NASDAQ, but it doesn't really matter what the asset is. Just know that when you're getting a buy, you just know the directional bias that you're looking to go in. Same thing here, euro dollar. Like we know we went from, actually it's funny, we went from green to gray, and even though we were shorting all the way down, the colors didn't change. But guys, I'm gonna, if you feel confident enough, you don't necessarily need to wait on the gray to turn green. If you're seeing such a big bullish move on the DXY, the DXY is giving you the permission, if you will, to go short this bad boy because it's such a bullish move to go long. But of course, if you want to wait it out and for it to turn red, of course we didn't get that in this situation. You might have got it on a 1 minute. So let's have a look at 1 minute. Sometimes, you may look at your pair, you might be waiting for the software to tell you it's time to switch. And you may not get it on a 5 minute, you may not get it on a 3 minute, but you might get it on a 1 minute. It all just depends, but I wouldn't do anything without the dollar index first telling me what's going on, right? So let's have a look at 8.0, yeah, there we go. So can you see what I mean, guys? At 7:56, even before the market opened, I want to show you something. These greens are the daily, right? These daily levels. So similar thing, it's telling us we're not expecting the market to maybe go higher than where we were at this point. This where we had a high. What time is that? So yeah, so we had a high going into this level here from this is like Asia market going into to the New York. So what happened was, just so I'll walk you through like as I see what happened. We get rejection of this level, we come down, price comes up. So now we've got this line. This is our line of resistance. We always need to look to the left, just like if you're crossing the road and you're in North America, traffic comes from a different direction maybe than in the UK, right? So, and depending which way you're looking, left and right. But you always want to look left when you're trading, because we can't look right, because right's the future in the markets, the left is what's happened. So leading into the New York Open, we get rejection. Price kind of broke it. First of all, price broke this level. This level was a level of support at one point. It came down and now became a level of resistance, which means price is struggling to go above it. It came down, it breaks it, it doesn't quite break it, it hits it, it gets rejected. Guess what? It hits it again, gets rejected. Guess what? It hits it again and gets rejected, leading into our 8 o'clock market, or New York market open, which is 1 o'clock in the UK. So the mere fact, guys, that we get this big, massive push at 7:54 on the dollar index, we go from grey to green, red, to grey to red, right? Grey is the candle we're looking for before we take a sell trade, and boom. So like I said, sometimes you might not find it on a 3 minute, but you find it on a one. It's like, wow, how come it's not giving me a signal yet? Everything's lining up and I'm waiting. And if you waited out on a 5 minute, you might have just missed the move, even though, you know, if you trade and you know market structure and stuff, you can probably take the trade. But if you want to follow the rules verbatim, then you'll just be waiting there, and there it is. You'll just be waiting there, and you would have missed this massive drop on, where's it, 8 o'clock, 8 o'clock. Yeah, 8 o'clock here. You would have missed this massive move, even though we got rejected you can see the rejection, and then we dropped all the way down by the 1 minute quarter. Okay, so let me just check the chat. Have you set up alerts for absolutely, brother. That, to be honest, the DXY is the only thing I put alerts on. Only. Now, don't get me wrong, I've missed trades because I've only put it on there. But there's times when you want to be, regardless of software indicating, like this one here, 8 o'clock market open. That's when you want to be at the screen anyway, because it's the New York Open and it's a Friday, and you know, for that morning you're going to probably get a bit of movement. So any particular move like that, the London Open, New York Open, Tokyo Open, be at the screen, be ready 5 minutes before, see what's going to happen before, leading up to it, because you want to know the story before you get. I used to be very reactive. I'll just trade what I see, and then I would even look to the left, and the left's telling me, dude, can't you see how many times I got rejected? Yeah, you know, it's like, it's not worth you taking that trade because I got rejected. So again, we go from grey to red, on the dollar index. We go grey to green. And it's not just any little dibby green, it's a big bullish move to the upside. One thing about the dollar index, there's a certain level, I think it's 100 points. If it's 100 points, it's extremely high, and it's bound to come down. I don't even know the exact number, 99 point whatever, but if it gets to 100, like if you see the dollar index ever hit 100, guys, you know that you're really kind of looking more on a massive drop coming down. I mean, this was the one, like it hit the 100 level and it dropped, and so the drop was going to be hard, because for it to go from 99, which it typically does, to the 100, it was waiting for a drop. Now, obviously, if you don't know how powerful the dollar index is, then you wouldn't really be aware that this is overbought kind of territory. If I let me just put an RSI in there, just to show you. Saturate my point here. Indicators. Where am I going? I'm going to the right place. So let me just quickly put an RSI up on this bad boy. What are you doing? I don't know what's going on with my charts, man. These are all my favorites. I've got a lot of favorites. Too many favorites. I don't know why this thing's not letting me choose RSI. All right, relative strength index. Here we go. Alright, so the only thing I'm really interested in on the RSI is, I'm not interested in all of that noise, to be honest. The only thing I'm really interested in is the 50 line. Okay, so let me just clean this up. So the SMA is actually quite nice, I must say. Having that SMA line is quite nice, but the only thing I'm really want to show you is not the 70, not the 30. I only just want to show you the 50. I could even take off that, but I'm going to leave that on there, right? Just to accentuate my point. So, whoops, how did the Fibonacci get in there? What the heck? Right, too much. Right, so can you see this? Up to this point, you know, just so those who've never traded with RSI before, like this, if the purple is above the 50 line, which is this preventive line here, then we're looking for longs. The moment it goes below it, we're looking for shorts. So not only did it go below it, it went really deep. Like you'd start to see the red, like the dollar's bleeding kind of territory. So again, this is 120, 24, 27. The RSI was below that line. You know, I don't even need to really bring the RSI up. I'm just showing you we're really in overbought territory here, and we're just waiting for that line to cross back down below the 50, and then we can take shorts all day long. And you can see here it just continued to bleed. Price started to come back up, and then this is I'm not really going to talk about the SMA, which is in yellow, but just to know that the purple line, which is the RSI line, stayed below the 50 level, so we're sticking in shorts, and the only time it even came to a point where we might have come out of this trade, if you was using the RSI as a barometer, is when price came above the 50 line, and you're like, you know what, I've squeezed enough out of this. I mean, if you hadn't squeezed enough out, this is like squeezing orange or lemons to make enough lemonade, right? If you hadn't squeezed every pip out of it by then, by the time that came up above the line there and it became grey, those two indicators there at 436 would have told you 436, I'm probably out of the trade. Now, guys, before I go, I want to show you one more thing. Any questions on that? Feel free to post it in the chat. I'm going to take a quick drink. I know I might be speaking a different language to some of you, but just watch this again. Now, the market, it's Sunday. The market's going to open shortly. I want to show you something crazy. I'm going to switch back to, oh, wait there. What's that? Yeah, sorry, I thought I got the thing wrong. I'm going to switch back to something that happens when the market open. Let me get rid of the RSI. Right, the market, as we know, gaps on a Friday. So Sunday, all right? But I never really paid attention. What did I just delete? So delete that one. I never really paid attention to it until I started looking at what this thing was doing. So let me just go to Sunday. I'll just show you it month by month. So let me just show you the last Sunday. Yeah, last Sunday of May. I'm going to show you, yeah, Sunday market opens at 6, which is 1800. Let's go 1900, because the first hour I wouldn't even go there. The spreads will kill you. The spreads and the feds will kill you. Right, look at this, guys. I was showing this guy this, and I didn't really know how powerful it would be. I said, draw a line on Friday where the market ended on Friday. Just draw a trend line. So this was it there. I'm going to draw a white line. Boom. All right, I'm going to show you something. Now, this is not going to work out perfectly. You just have to, got to set your alerts. But I'm going to show you how perfect this move is. You couldn't even, I don't know, you can't even measure how good this is. You have no idea how amazing this is. So this is Friday, market ended here. This is Sunday, market opened here. Now, this, as we know, if there's a gap in the market, it's gonna get filled, right? So no different to the dollar debt index. It has to fill it one way or the other. So I don't know at one point that this is gonna be the point where I'm gonna get in. The only thing I'm gonna set an alert. This happened at 5 a.m. I was sleeping, but all it does, it just lets me know the directional bias I'm going to look to take. So price never came below this line when the market opened on Sunday. I don't know if it did on Monday or whatever, but I'm only talking about the market open. Whoops. Man, I'm using a trackpad. Man, this thing is messing me up. Anyway, so this is Monday, right? This is the Monday New York Open. So nothing. It was all above. So I want to show you something crazy. Price came down and it whipped it. Guess what? The next 5-minute candle came right back. Right? It's just like a yo-yo. Okay, we're going to test this level. Now, whenever you look at any market, if you get something testing it, you know that that's going to be a really strong springboard for the dollar, the euro, the whatever you're trading, gold. In this case, we are trading against the dollar index. So can you see this? A massive, this is wicked. This candle here I feel that's pure manipulation candle of the dollar. So we get this move here. People thinking, oh yeah, we're shorting the dollar, we're shorting the dollar. And we get this massive spike, one candle at 5 o'clock, when it literally pierced the level and flew away. That just literally touched it. So again, if it was always like that, that would be fantastic. But it's not. But it's now for us to wait until we get the right setup. If I put this on a 3 minute, let me just put this on a 3 minute. Man, do I have to go back? I have to go back. We go back here. Go to. All right. So let me show you on a 3 minute that gap. That gap's on a 3 minute is even sicker. It's actually interesting. It's really different. Like when you look on it on a 3 minute, it's so different. But this, my friends, where was it? Where did I go? It was here. Oh, it was here. Was it here? Yeah, oh my gosh, yeah. This is it. This is it. I was like, where is it gone? Right, this is it. So, this came back. And in itself, guys, this was actually a strong move as the market opened. But again, I'm only waiting for price to come back. But this was the move there. Actually, it shows very different on a 3 minute, doesn't it? Than on a 5 minute. Anyway, on a 3 minute, we get this beautiful rejection. Beautiful rejection. Goes from grey to green, and we could technically take the opposite of that trade as we went into London, as we went into New York, right? As we went into New York, like you know, I'm salivating at the mouth when I saw what happened, the New York Open. Like, guys, we would have not only killed the market at 9 when this alert came out at 9 o'clock, we would have been in this trade from now. I'm not saying people are going to get up at 5 o'clock, but the directional bias of this trade is what I'm alluding to, is that we're looking for the market to react a certain way. So again, we know at 8 o'clock we typically get a move in a particular way. And let me see, at 8 o'clock, 8 o'clock's around here. Yeah, 8 o'clock's around here. So this was the Monday open. Mondays typically are very slow. But what I love about this is at 9 o'clock, all of that move that was leading up, we could have taken advantage of it. And then it came back. And this yellow line is liquidity levels. Don't know if you're trading using them or not, but these are really powerful lines. It's an indicator, part of the software. Liquidity targets, where again, price came back, tested it, broke below it. And, you know, kind of like a magnet where price comes to. But anyway, I just want to show you what the DXY did on that Sunday. I'll show you one more. Just show you. I don't know what it's going to look like today. But I'll show you one more. On the following 7th. All right, so the 14th, I have no idea what it's going to do. But last Sunday was different, right? Very different. But this is why the market open on a Monday. Like, I used to think, Monday's slow, I'll just pay attention to later on. All right, but this was the gap, guys. Right, this was it here. There to there. Now, again, we had a lot of messing about. If you look at what happened, we had a lot of messing about. This is Sunday night. Okay, price did move a nice way bit. It came back. It started to hover inside of that gap. Hovered inside that gap, came out, hovered back inside that gap. When did it finally make its move? Well, all of this, I call it a bit of market chop nonsense. This happened again. Remember, at 5 o'clock, like the other one, where the price touched it, this was a bit later on. But I want you to pay attention to this. This was like more like 6 o'clock. So it was 5 o'clock the last time. This was more like 6 o'clock, leading into the New York session. Price finally rejected out of this gap, leading into New York. So this is 7 o'clock. Now we know a lot of times, 7 o'clock the market moves, 8 o'clock the market moves. Just so happened at 7 o'clock this market moved. 8 o'clock it still dropped And then around 9:25, just before the New York stock market opened, we get this move back to this level, okay? And it's just crazy how this moves. Like I said, these yellow lines are part of the liquidity levels that Sal has with the software. So again, this could be a take profit level. You can see where price could come back if it breaks it, in continuation. If it comes back, it did try and come back and didn't kind of go past it. But you know, these are levels, are kind of key levels where, you know, market could range and break out of. But I just want to show you how powerful just that keeping an eye before the market opens at 7 o'clock, 8 o'clock, what the market will do. So Monday, 7 o'clock for us, which is midday in the UK. Let me just go back to this one. And then I'll show you what it looks like on an actual chart, right? So again, that was 5. We went into around, so yeah, so up here, we actually got the alert around 9. So again, remember 8 o'clock was a bit sluggish. But last week's one, it was from 7 o'clock we got the move. This one was like more from 5 o'clock. So you can't predict it like a watch, right? Otherwise everybody will be rich the moment Monday morning rolled around. But just to give you an idea of that, what's happening with that gap, I think it's kind of telling. I've not done enough extensive research to say, oh my goodness, every single Sunday, but now I'm aware of it. Like, mark up that gap on the DXY, and then when you're going into trading whatever, let's just go back to my favorite, trading Nasdaq, for example. If I go back to the same date range, and I'll go back to that same time, 7 o'clock. Right, so when I'm trading the Nasdaq, right, this is Sunday night. I want to look at Monday. Remember, if we're going long, if we're going long on the dollar index, we need to be doing the opposite on Nasdaq. So I want you to see this. So again, we had to. Oh man, I don't know what that white line is for. I drew it for a reason. Anyway, the alert at 9 o'clock came in on the dollar index. We didn't get this. We didn't get the same move. Now, when you're trading with this software, the momentum index has to line up. It has to be green. We didn't actually get the green till like 10 o'clock. All right. So even though the dollar was pushing hard, we didn't get the same. It's not always identical. The chart's telling us, okay, we need to maybe wait this out before we go from, what's it called, gray to green. And a 5 minute. Again, I'm going to switch to a 3 minute. We got, let's see, we got the green candle at 11:20, right? Keep that in mind. The dollar was pushing at from 9 o'clock, and then we actually got the move to the upside really around 10 o'clock. So let's just have a look on a 3 minute. Same candle, same chart. I think I'm gonna have to do this again anyway. Go back here. All right, it's just right. Let's have a look. Sunday. All right, so we're getting ready for our Monday morning trade. Let's see what time that is. It's any different. So it's almost around the same time, 11:15. Though, like I said, you know, depending how confident you are as a trader, you know, you can start reading these. This would have been green. The 4 hour would have been green. You might not have got an alert to say, hey, we're changing trend here. But I'm going to add one more thing to the chart, which I've taken off up until now, which is the AI software. All right, so the AI software is a different animal completely, right? If the two line up, you're made. As they say in Liverpool, you're made up, right? So I'm going to put the AI on, and up to now, we've not seen an AI alert trade because I've not put it on the chart. So again, I'm switching it there. I'm going to put it on a 5 minute. I just want to see if there's any difference. Sometimes, you know, for me, the best, if you want to take like the best of the best, wait for them to both line up. And you're just like, you're just going to kill it. All right, 31st, go to. All right, let's just see if there was any AI. No, there wasn't. So there was no AI trades. The AI trades show as OTE. So there was no trades. There, actually, let me see. I lie. Let's go to Monday. So Monday we did get an OT, but that was actually after that one. But again, this is a really good trade. So let me just do one more thing, just to make it a bit cleaner for you guys. I'm going to take off the alerts from the AIO software. So there's two different softwares at work here, the AIO and the AI. So what I like about what the AI does, it gives you these alerts, right? This OTE. So OTE, we're going long. And guys, if you see this, this is just like, I've not pre-done anything, right? There's not one I made earlier or anything like that. But you see what we have, the OTE going long, gives us a really good long. It actually shows on the previous candle, an engulfing candle, we get the alert on the gray, and then we're going on the green. On the other side of the equation, we have the dollar index on the left side. What is that doing? That's actually, even though it's green, it's actually going short. The market is dropping, all right? And again, it's dropping. That one's going long. That's giving us a good AI alert. You don't need to do much analysis. It's done it already. But you just want to wait until everything lines up. We've got green here. We've got green here. This would have been green, the 4 hour. This tells us what our stop is, which is really far. If you're trading personally, I don't use that stop because I'm trading with a prop firm. I use the most recent swing low, which is this candle here. You can see we went this, we were going down, price turned around and we went long. So I use this pivot level, my swing low level, as my stop loss, and as price moves into profit, I adjust accordingly. I'm not going to go into what's it called, managing your trades and stuff like that. There's many different ways of doing it. It's all about your risk. So my risk on this trade, when I get this trade, is this, from here to here. That's my risk. So I'm looking to, if I'm risking $100, right, I'm looking to make maybe 3 times that. All right, so let's just have a look here. So if I draw that, that's my risk. So I'm risking, so it's got 50, I'm risking those 50 points at that point. So I need to make at least 150 going in this direction. And that's 3x on my money. All right, so I made it on this candle. And it took, what's that? It took less than an hour. Is that right? Yeah, it took just about an hour, just over an hour, for me to 3x my money, you know, on one trade. And, you know, as we know, that's unrealistic in the normal world, because the normal world tells you you can't make double your money on your assets because they take the money, you don't. You know what I mean? So just to show you how powerful. Whoa, my battery is coming up with energy saver. Okay, that means I need to wrap this up. Any questions, guys? I'm going to wrap this. We're at almost the hour mark. Just one thing I want you to, the only thing I really want you to get from this is the power of the dollar index. I don't know everything about it. I know enough to say, if that's moving a certain way and I get an alert on it, does it line up with what I'm getting on, where I'm getting on the trade there, right? On my trades on NASDAQ or gold or whatever, right? Do they line up? And again, this one thing I would say, those guys that are trading in the UK, you know, the euro, which is made up heavily of the dollar index, opens at 7 a.m. in the UK, which is 2 a.m. for us. So a lot of the times around 2 o'clock, and then the London opens an hour later. So a lot of the time you get a lot of movement on that pair. Let me just look at this one real quick. This was the 2nd of June. 2nd of June. All right, let's just have a look at that real quick. I've taken the thingy off this chart. Let me put that back on. All right, let me put that back on, because I do use both alerts. You could use the trend signal, trend shift. I say trade signal, but trend shift TS, or you can use the other one. But the other one, it's just too many alerts, right? So I like to keep it. I like to keep it clean. So let me just go to 2 o'clock. What was that? 2:06 on Tuesday. 2:06. So again, we got the this alert. This is actually really nice. Let me just make this so you can see it a bit better. So we get the AI alert, which was really good. Remember I showed you on the dollar index. Let me just bring this down a bit. Remember I showed you on the dollar index that we did have the push before, but here at 206. If you wasn't convinced that the AI alert was a good one, the DXY at 206, just as the euro market opened, we get a long on, which we would have been in on the AI. We would have got in on that trade in the London, just before the London market opened. And as you saw, as the market dropped on the dollar, we got a nice move on NASDAQ. You could have put any chart in here. Gold, like I said, you could have put the euro dollar for those trading Forex pairs or Forex prop firm accounts and stuff, and you would have had the same move. Let me just go back to that one. It's the same time, Monday, or was it Tuesday? Monday, I can't remember. Tuesday is. Yeah, Tuesday, early morning. Early, so that's 2:03. Awesome. 2 o'clock. Right, go to. Right, so again, let's have a look at that. Where are we? 2 o'clock. So again, these aren't random pushes like that. They're not random pushes. We get that push at 206. We get that push at 206. We killed it. And then we get the AI alert. You know what I'm saying? Like, you can get in these trades before, because of what we're seeing here. And yeah, and it's just as crazy good as that. So yeah, I think I'm done. Anything else, guys? This is definitely, I wasn't expecting to go this long, but I thought I would have been summoned, because I've got to head back to church. But I didn't hear anything, so we're good. Any last questions, guys, before I wrap it? Wrap it up. I'm just scrolling through here to see, can't see anyone. But any of these alerts, man, that happen. This one here, market open, 8:03, new open on the 3rd, 8:03. I see a question. I'll go to it in a sec. On the following day, New York market open. Again, if I'm not looking at the chart at that time, it's because I'm doing something else. But if the dollar index pings me, trust me, man, because I got to a point where I was getting too many different alerts, and I was just like, oh yeah, you kind of just, if you get too many things, you just start ignoring. So that's 8:18. 8:18. Oh, this didn't move. Sorry. Yeah, go to. Oh, here we go. Here we go, my friends. So again, I just want to really rubber stamp the point. We didn't get no alert whatsoever at 8 was it? 8:15. Not one. But we did get the drop, right? It doesn't stop the drop happening. We got the drop on the euro, and that would have been the drop for anything. So let me just go to questions and wrap this up. Brilliant. Thank you. Just need the recording. Yeah. All right. Yeah, definitely. And I'll send you the recording from the other. This one's going to be easier. This one recorded on the cloud. The other one recorded on my hard drive. All right, guys. So thanks for your time. I've pinged this in the group, recorded in the group, and happy trading. Stop the share. All right. Take care.
Thanks. Have a good day.
You're welcome. Yeah, and you. Take it, guys. Bye-bye.